2013 was a banner year for housing. The industry finally seemed to find its footing after half a decade of being in the figurative basement. Home prices came roaring back in many parts of the country, and the foreclosure crisis does appear to be in the rearview mirror. Despite all the positives, though, there was a distinctive shift in the rent versus own debate. Diana Olick has been covering housing all year for us and joins us from Washington. Welcome, Diana. Good to see you.
Thanks for having me.
Tell us about how home prices stole the show this year. They were up like double digits for most of the year.
Yeah, gangbusters nationally. Look, we saw home prices up between 12 and 13% across the nation, and in some markets they were up over 20%. And while that sounds like a good thing, and it certainly delivered a lot more home equity back into homeowners' pockets, it also was just a bit too fast, too high. Affordability really began to plummet, and that priced a lot of buyers out of the market just as home buying was starting to come back, especially those first-time home buyers who are really crucial to a good, healthy housing recovery. So we certainly want to see prices go up, but there is already talk that those price gains will ease in 2014 because affordability was simply hit so very hard this year.
And so it seems to be that because of those very high prices, a lot of people decided not to buy and to rent. I mean, renters were a big story this past year, right?
They were a big story this year. They will continue to be a big story next year. We've talked so much about renting. It's an incredible phenomenon that's happened during this very unique housing recovery. The reason that there are still so many renters and that there was such high rental demand, despite the fact that rents keep getting jacked up, is because a lot of folks simply cannot qualify for mortgages. They cannot afford the higher down payments in today's tight credit market. There are also a lot of younger Americans who are saddled with very high student loan debt. That was a big story in 2013. Student loan debt keeping those first-time home buyers out of the housing market. Now, we also saw a lot of investors get into the rental business. We've seen that over the past couple of years. Institutional investors buying big swaths of distressed homes and putting them up for rent. So not only do you have the multifamily apartment trade, but you also have this new single-family rental trade. And we saw that develop throughout the year, not just with large investors buying homes, but then also securitizing the rental streams and selling them off to investors as bonds. And most recently, we just saw that Blackstone is now starting to lend to other smaller investors to buy more rental homes. So what does it mean? It seems that we will see more rental housing stock on the market. We also know that builders are putting up more apartment buildings, so we'll see more stock there. Hopefully that will ease some of those big rent games, because I believe at least we are going to continue to see high rental demand through 2014, just as we did this year.
You just mentioned builders, home builders. What kind of year was it for the home builders and their stocks?
Well, look, the home builders began building more again, and that's certainly what we wanted to see. But we are still way off the normal rates for what you would see for the kind of demand that's out there. The home builders have been struggling to come back. But look, they are faced with high costs for land, labor, and materials, and that really hampered them this year. They were forced to raise home prices for newly built homes. And in fact, they raised them a bit too high. One very noted analyst, Ivy Zellman, just recently downgraded her forecast for next year, saying that home builders raised prices too high. We can't expect to see the sales or the housing starts next year that we originally thought we would see, given the demand. And new home sales, you know, they go back and forth. It's hard to tell because it's a very rough number in that market. Home builder confidence is up a bit, but home builders are really not barreling back. Their stocks barreled back, you know, a couple of years ago, and folks have already said they're priced way too high. That's why some are really looking more toward building materials, that is, for people who are renovating. We should see healthier home construction in 2014, but the builders are going to have to stop with those huge price gains, just as we started this conversation.
All right, Diana, thanks very much. Diana Olick from Washington tonight.